Hello everybody. So a midday video today to tell you that MSTR is still king, outperforming the Nasdaq, and I have a little commentary about a few ETFs, about Bitcoin proxies, and about the big earnings of Tesla tonight, which I believe will set the tone for the market. Anyways, let's get started. So MicroStrategy is still the king. It keeps on winning. And let me show you this. I mean, you can't make this stuff up. So Nasdaq, as I shoot this video, is up 3.3%. MicroStrategy is up 9.09%, 3.03%. So exactly 3x more than the Nasdaq. That's quite impressive. And of course, yesterday I couldn't tell you how much more MicroStrategy was than the Nasdaq because the Nasdaq was down, right? So the Nasdaq was down yesterday 2.5%, and MicroStrategy was up on the day. So MicroStrategy just keeps stacking the up days. And of course, you may say, "Oh, this is transitory. This is just 2 days." Well, I'm gonna be fair. I'm not gonna compare the Nasdaq from MicroStrategy in 2020 because otherwise you're looking at a 10x versus, well, not a 10x at all. But let's be fair and let's take a shorter period. Let's take beginning of the year until today, so almost almost 4 months, so almost 5 months. So anyways, if I look at that, the delta in performance between MicroStrategy and the Nasdaq is a 28% difference. So it's up 15%. MicroStrategy is up 15%, and the Nasdaq is down almost 13%. So that gives us a 28% difference in performance between both assets. And of course, if you look at Bitcoin itself, Bitcoin is right in the middle. Bitcoin is down 2% year to date. So we really have three flavors of risk on or three flavors of risk off, depending on your view of Bitcoin. I tend to think Bitcoin is risk off, but we really have three flavors where the least performing asset, a well-performing asset, which is Bitcoin, which is really well, and then MicroStrategy built on Bitcoin, not built on money. MicroStrategy is built on Bitcoin, and so it's performed way more because it's built on Bitcoin. And of course, the Invesco QQQ, the Triple Q, the Nasdaq, it's got amazing companies. But most of these companies are built on fiat. They're built on melting ice cubes, and therefore the fluctuation of QQQ is based on the macro fears, is based on the interest rates. The drop from yesterday, that was all about the back and forth between the President of the United States and Powell. Well, there's no back and forth. It was only a one-way street, but you know what I mean. That was the fear of interest rates. That has a great influence on companies who are fiat derivatives, like the company in the QQQ. MicroStrategy is part of a small but increasing group of companies who are not fiat derivatives, who are money derivative. And of course, some people still call money Bitcoin, but I call Bitcoin money. Building on what I said yesterday. So yesterday, the video was released this morning, but I made the video yesterday night. Marathon and Similar, they were both at 1.01. And I said, I mean, theoretically, I believe it could be possible, but I really don't think we would see a company trading below NAV. Why? Because Bitcoin is the most sellable asset, right? It's more sellable than cash, right? Because if you have cash in a bank and it's the weekend and there's a banking crisis, you can't access your cash as your company. So BTC adjusted enterprise value to me is even more powerful than pure enterprise value because how do you access cash on the weekend? How do you access cash when your cash is at Silicon Valley Bank and Silicon Valley Bank is failing? Granted, that only happens, I guess it happens more than we think it happens, but you know what I mean. It rarely happens. But I think Bitcoin is even better than cash. And that's what I said. I don't theoretically believe a company could trade below cash. They sometimes do, but it's very, very rare. And they bounce right back at 1x the Bitcoin on the balance sheet. So essentially, yesterday, Mara and Similar essentially were free or next to free. And they bounced right back on that 1x NAV. And we'll see. We'll see if we ever see price to NAV companies who are trading below 1x. But in that case, these companies would be a no-brainer to buy. I want to talk about maintenance ratios now. As a Bitcoiner, it's important. The goal, of course, in my view, is to keep the companies for the longest run and eventually borrow against these companies. And now that we have the TradFi rails, we can now own these companies on brokers who give you credit for it, right? Who lets you borrow against it if you have margin enabled in your account. So anyways, and I'm always very, very careful with margin. My rule is never use more than 10% of your margin available. But I'm thinking down the road, I want to study these maintenance ratios, because down the road, when Bitcoin is a much, 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 much bigger asset, when many of these BTC-based assets will have 10x, and make no mistake, I really believe they will 10x, because the state of fiat is absolutely in despair. I believe we're going to have the Moab, the mother of all printers, is going to show up, because we have a stubborn Fed chair who refuses to drop the rates, and therefore when the rates are eventually dropped, it will be the mother of all printers. It will be a rush to save the system. That's the way I look at this. So I believe these assets that are built on Bitcoin will do very well. And so I'm starting to think about the future and the maintenance ratios of these assets. If you look at Semler Scientific, 60%. That's nice, right? If you look at Mara, that's 50%. That's even better. If you look, on the other hand, at Strategy is still discriminated, because Strategy's maintenance ratio is 70%. And of course, if you follow this channel, I mean, in general, in this channel, we believe MicroStrategy is perhaps the least risky play out of all of the proxies, right? And well, it is poorly treated. And by the way, the broker I'm showing you here, the maintenance ratios, is Robinhood. You still, and Robinhood at this point is becoming a competitive advantage for the savvy investor. It's becoming a competitive advantage for the savvy investor, because there's a lot of brokers, the old school ones. I'm not using names, but there's a lot of old school brokers who still have you 100% ratios on things like MicroStrategy or on things like Semler. So you gotta choose the broker that's gonna give you the right maintenance ratio. And of course, Robinhood is not perfect, but it's slightly better than I think a lot of the brokers out there, and it's becoming a competitive advantage in my view. So in a true Bitcoiner spirit, and in a true beat the denominator spirit, don't forget this channel because beat the denominator, i.e. beat the fiat inflation, beat the melting ice cube. That's why I named this channel Beat the Denominator. I envision a future, and this is something that I am not doing now, but that's a future that I'm envisioning, maybe a decade, maybe 2 decades from now, a future where we just borrow against our Bitcoin-backed assets. And of course, that would be risky, but keep in mind my rule of 10%, and imagine the asset 10x's, and you only borrow 10%, I would argue the risk is very, very minimal in such situations. No financial advice, no leverage advice, no advice whatsoever. But anyways, let's face it, the cold storage Bitcoin is not touching the internet for another 20 years. And I think that's kind of the consensus of a lot of people who have cold storage BTC. If you've been in BTC for a while, you likely have cold storage BTC, and you just had the key somewhere and you forgot about it. And you'll think about that later in the future. But right now, as there's, new opportunities to invest, and there's always an opportunity to invest, I'm looking at ways to borrow on fiat rails, to borrow Bitcoin on fiat rails, to borrow against Bitcoin on fiat rails. So what are some ways to get exposure on the world's most top assets with a better maintenance ratio than what is given to, say, Strategy at 70%? And this has been a thought that I've had for a long while. This is Own Bitcoin. OWNB is the ticker symbol. It's from Bitwise, and look at that. The maintenance ratio of OWNB is 30% on Robinhood. And so I don't know if this is an anomaly, or I don't know if maybe I don't know if these companies talk to each other, or I don't know what methodology, but there is a methodology somewhere that makes it so that Own Bitcoin, which owns MicroStrategy, Mara, CleanSpark, right, Semler, so these companies who individually have 70-60% ratios, and make no mistakes, many of these companies even have 100% maintenance ratios, many of them. So all of these companies, even Tesla doesn't have a maintenance ratio of 25%, right? So all of these companies are in this ETF, right? And this ETF is getting 30%. But if you look at any of these companies individually, the maintenance ratio is 75% or 70%. Or if you're lucky, 60%. So in other words, risk, as seen through the lens of a broker, put in a bucket of correlated risk, quite frankly, for some reason, experiences a much, much, much lower maintenance ratio than owning the stocks individually. And of course, when I look at that, and when I think about the long-range plan, the very long-term plan, I'm like, okay, well, it's important to look at assets that your broker also likes if you want to play that game, if you want to play the buy, borrow, die game, right? That billionaires play. If you want to do that game, it's important to note and understand how fiat rates your investment, how the fiat world rates your investment. Another ETF, a highly disliked ETF by a lot of people, but that's okay. That ETF actually has not done that bad at all. If you actually look at the long-term performance, it had a peak and it's not back to the peak. But if you bought it 10 years ago, you're in the clear with that ETF. Same, it's 25% maintenance ratio, so the lowest maintenance ratio you can possibly get according to the regulation. So the lowest maintenance ratio, and look the holdings, right? Bitcoin itself is 11.59% of the holdings. Coinbase, 7%, right? Is Coinbase going to outperform Bitcoin? At least it's going to do in line, in my view. And you have a lot of risky per TradFi lens companies in there. And yet, when you buy it as a bucket, the bucket is experiencing a 25% maintenance ratio. So anyways, I thought that was quite interesting. Moving on, the point is, Tesla. Let's talk about Tesla a second. And by the way, note that Tesla is included in the Bitcoin ETF, right? The own Bitcoin ETF has 1.5% of Tesla in there because they own 11,500 Bitcoin. That's not bad at all. So that's why Tesla is relevant. So let's talk about Tesla today. Because there's other earnings of Tesla tonight. And Tesla is the other big risk asset, the other big outperformer. If you look at the past 15 years and you look at how assets have performed, you're going to find Tesla. You're going to find NVIDIA. You're going to find Bitcoin. You're going to find these assets. And that's why I want to talk about Tesla. As you know, Tesla is my second largest position. But I talk about Tesla very little on YouTube because this is a hobby for me. And frankly, whenever you make a Tesla video, there's just so much hate. So I'm just not going to cover Tesla on YouTube because of all of the... Because this is a hobby for me. Not that I care, but it's a hobby for me. So I don't want to be reading, people who are not liking it. The point what I'm trying to say is that I understand that a lot of people still dislike Tesla a lot. And the point is that muscle memory, in my view, based on everything I've read and based on my experience, muscle memory is 18 months, very, very much max. Actually, in the news cycle, muscle memory is more like 10 days in the news cycle. But really, long-term muscle memory is about 18 months. And my guess is that all of the disliking and all of the quote-unquote hate that Tesla is getting, in 18 months, that will be gone. That's my guess. And of course, it's a overhang on the stock price. But, I live in the Gulf area, and I don't see anybody boycotting BP anymore, British Petroleum. I don't see BP being boycotted by anybody anymore, even though they had the world's worst environmental disaster in the history, of the United States, perhaps in the history of the world. Doesn't really matter. They had a big issue. People were boycotting. I remember vividly this. These were my first few years my early years in the US. I remember this vividly. People were boycotting BP. And today, BP is just fine. There's no impact, right? BP is just fine. Just like people have forgotten about Nike's sweatshops and all of that sort of stuff. The muscle memory is really, in my view, just about 18 months. So I think this is all transitory. Tesla earnings tonight, I have no idea what's going to happen. It's going to set the tone for the market, though. That I know for sure. Every single news outlet will report on the earnings, and they will look at the data, and they will look for the most negative thing in the data, and that will be the headline, and that will be the title on CNBC. Mark my words, CNBC tonight will go through the call, go through the transcript. They will pick the most negative information, and they will place it as the headline on CNBC, and every single news outlet is going to do that. And the question is, where is the stock going to be headed? Where is the stock going to go? Well, we really don't know, but last time it actually went pretty well for Tesla. So it's a wild card. We don't know. It's going to depend on what is said on the call. The point is, I'm preparing some dry powder. And if it drops, the dry powder will be spent if it drops. And if it doesn't drop, well, the dry powder will probably just go into Bitcoin proxies or HIMS and companies like that. So anyways, this was not investment advice. This is not financial advice. This is just entertainment or being more entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.